Hello and welcome back to my morning report analysis videos with me, Rich, Market Analyst at Handtech Markets on Tuesday, 5th of June. Looking at Eurodollar, which is sort of consolidating really, but is still testing this overhead supply. 17.15. I'll zoom out. November and December lows of 17.15. You've also got 38.2% fib retracement of the big long-term decline back from 2014. That's in at 17.35. So it's this basis of overhead supply that has been preventing the market from recovering in the last sort of week and a half really. And you can see that through the session highs, where you got all these long upper tails that sort of flounder between 17.50 and 17.35. Yesterday's high 17.44. And the market sort of retreated back again, but look at these momentum indicators. They are beginning to get some traction. You've got the stochastics, which is the most sensitive one of the three. That is accelerating nicely. You've got the MACD lines, which have crossed higher. You've got the RSI up at 40 now. That is sort of a multi-week high, sort of 5-week high. So there is the prospect of this recovery still underway. And I'll show you on the hourly chart, whereby you could argue that this is a base pattern forming here. Head and shoulders reversal of some description or other. 1750 on the hourly chart sort of starts to come in as a bit of a pivot, doesn't it? And a breakout above 1750, I think that would be a pretty decent indication. But you look at the hourly RSI, finding support nicely above 40, having previously gone below 30 consistently, now finding support above 40, pushing towards 70. That hasn't happened throughout this corrective phase. MACD lines on the hourly, finding support around that neutral area. Stochastics also not going below 20, interestingly. So there is this momentum improvement, and if the if the market can move above 1750, that would, I suppose, confirm a bit of a base breakout. It would take you through this resistance area as well, above 1735. And I think you're then up towards 1820. You got that resistance, 1830. So there is a sort of a basis of a move up towards 1820, 1830 once you get through 1750. And I suppose you could argue, with that low coming in at 15 area, 1506, 1505, that there is sort of this, as I said earlier, this sort of base pattern of maybe 230, 240 pips of recovery from 1750. So that's your 1915 to 120 big figure area. So there is a prospect of this recovery taking off if you can get through this area of overhead supply, but it's a big if at the moment because it has been providing the base of resistance throughout the past week and a half. So I wish you good luck in your trading, and I will speak to you later.